What is going on, guys? Welcome back to another video on the Closed Loans with Kris YouTube channel. This video will also be on my Instagram and maybe Facebook. I don't really use Facebook a lot, but I digress. This video is going to be about condo financing. I'm going to do a video series on this. It is something that is a little bit of a different process than financing a townhome or a single family residence. So I want to jump into that because I think it's very important and it's something that not a lot of people really realize. But before we start this week's video, be sure to go check out last week's video. I talked about the types of documentation you may run into while getting pre-approved. Keep in mind it's going to be different if you're self-employed or if you're just a normal W-2 employee. So go check that video out, hit the like button, hit the subscribe button, go follow my Instagram, Closed Loans with Kris on Instagram, and hopefully you guys get some value out of this video. So let's dive into it. So although there are many things that make condo financing different than townhomes or single families, I want to break this out into separate videos because it can be a lot. So the first thing I want to go over with you guys is warrantable versus non-warrantable condos and how we come to the conclusion whether or not a condo is warrantable or non-warrantable. So to put it lightly, I like to think of warrantable meaning financing, right? So warrantable condos are condos that can be financed through conventional loans, cash, non-qualified mortgages. The only thing that really condos have trouble financing through is FHA, VA, obviously USDA because that's a rural program. We'll get into more of the loan programs for condos in another video, so just kind of keep that in the back of your mind. Anyway, back to the non-warrantable versus warrantable. So warrantable condos can be financed with conventional loans, cash, and obviously non-qualified mortgages. A non-warrantable condo cannot be financed through a conventional loan. And there's very specific reasons for that, so let's touch on those now. So there are a few things that can make a condo non-warrantable, and how we determine that as a lender is something called the condo questionnaire. So your lender is going to send the condo association what's called a condo questionnaire. The association is going to fill it out, and based on their answers from that questionnaire, we are going to determine whether or not that condo is warrantable or non-warrantable. So like I said, there's a couple of things that can make a condo non-warrantable. That's going to be something like maybe the association's in some kind of litigation, or maybe they don't have enough reserve requirements in the reserve account that's required by the lender. Maybe they have too many renters in there, or there's one person who has many units and is renting them out to too many people, or whatever the case is. Condos get a little tough when it comes to renters, so keep that in mind, and that is something that could deem your condo association non-warrantable, which means your condo is non-warrantable, non-financeable by conventional loan. Your only option at that point would be cash or non-qualified mortgage, okay? So the condo questionnaire gets sent to the association and they fill it out, and we determine the warrantability of the condo. Now the litigation thing is important because if the condo is in litigation, depending on how serious the litigation, that means that the association could be in some big time financial problems. And if they don't have enough reserves in the reserve account, maybe they don't have the funds to meet those litigation liability coverage requirements, okay? So those are things that can deem a condo non-warrantable. So keep that in mind. Warrantable condos, conventional, cash, non-qualified. Non-warrantable condos, no conventional financing, only cash or non-qualified mortgages, okay? Okay, you guys, that just about does it for the differences between non-warrantable and warrantable condos. It's pretty straightforward, not a lot of stuff there. Next week, I want to talk about pricing and what's called a limited review for condo financing. That kind of ties into the warrantability of the condo as well, so it's important for you guys to know what a limited review is, and it's also important for you guys to know the pricing structure of condos, okay? So check out the video next week. I hope this video added some value to you guys. DM me, shoot me an email, text me, call me if any questions pop up. Happy to help. And go check out last week's video again. You can also find information on my Instagram, which is also Closed Loans with Kris, and I will see you guys next time. All right?